IBIT's Bitcoin holdings essentially went parabolic as MSCR's Bitcoin holdings went parabolic. It all started in January 2024. Almost 15% of the whole Bitcoin supply is owned by an institution, right? For the first time in history, the change in institutional demand is higher than the on-chain capital invested. But what you saw in 2026 is public treasury companies, they kept on accumulating Bitcoins, right, despite the bear market, while individuals, they supplied around 55,000 Bitcoins. It's around less than 2%. So institutional investors, they have a less than 2% allocation. We know from all kinds of optimizations that the optimal allocation to Bitcoin is even in a multi-asset portfolio, which is super diversified, probably closer to... Yeah, when Steve Jobs introduced the iPhone in 2007, he didn't just create a better phone. He created a new category of phone, right? And I'll argue in my presentation that the same kind of phenomenon actually happened in 2024 with Bitcoin, right? With the onset of institutional adoption and new creations, new categories of products based on Bitcoin. So first of all, very warm welcome from my side. My name is André Dragosch. I'm European Head of Research at Bitwise. And yeah, who's Bitwise? Before we start into the slides. So Bitwise is a specialized crypto asset manager. We manage around $11 billion in assets across both North America and Europe. So we do have crypto asset ETPs, Bitcoin ETFs in the US, Bitcoin ETPs in Europe. We also donate 10% of our profits to open source developers like Brinks or OpenSats or Human Rights Foundation. And we offer our on-chain addresses, right? We show them publicly. So we are very transparent with our Bitcoin ETP holdings. So let's continue with the story. 2024. So what happened in 2024? Spain won the European Championship, right? Who knows who's going to win this year? But yeah, apart from this, 2024 marked the iPhone moment for Bitcoin. Because what happened in 2024 was this, right? We had the US ETF launch, right? But more importantly, we also had Trump's election victory. I think both of these events marked an inflection point for Bitcoin in terms of institutional adoption. Because on the left-hand side, you can see IBIT's Bitcoin holdings essentially went parabolic as MSCR's Bitcoin holdings went parabolic, right? I don't know whether you can see this, but it all started in January 2024 when IBIT actually overtook MSCR's Bitcoin holdings. I mean, more recently, MSCR overtook IBIT again. And you can also see on the right-hand side that now almost 15% of the whole Bitcoin supply is owned by an institution, right? Bitcoin ETP or treasury company. So almost every 6 Bitcoin is owned by an institution, right? Of course, we know behind these institutions, right, there are many individuals, other institutions, right, because they act as fiduciaries. And so what it does eventually, it broadens adoption, right? So what also happened in 2024, and there's also a first-timer, for the first time, what we actually saw in 2024, and since then, is that the number of transactions in Bitcoin ETPs actually surpassed the number of on-chain transactions, right? So there was a large migration of transactions from on-chain, right, on-chain exchanges to essentially into off-chain vehicles like ETPs. And the effect was, I mean, you have pros and cons, right, of this kind of development, but one of the major effects was that on-chain fees actually declined, right? We were talking about high fees back then before 2024. And that problem, that issue actually got mitigated by this kind of off-chain migration. But you can still see that the big ticket transactions nowadays, they still happen on-chain, right? They don't happen in ETPs. One of the major developments as far as Bitcoin's performance is concerned is, of course, the effect of these ETP flows on Bitcoin's price, right? You can see it on the left-hand side. For the first time, we also saw like an increasing share of performance that was explained by changes in ETP flows, right? Around 60% at some point. Now it's around 40 to 50%. So 40 to 50% of the variation in the price of Bitcoin, so almost half, can be explained by variations in ETP flows, right? And on the right-hand side, what's even more important is there's an increasing correlation between what's happening on the ETP side in terms of net flows, right, inflows and outflows, and on-chain spot volume delta. What is spot volume delta? Essentially like the difference between buying and selling volumes on native crypto exchanges, right? And we're seeing an increasing correlation. So they appear to be more and more influential for Bitcoin's performance. Yeah, institutional bit is real. What does it even mean? Especially since, if you focus on the chart on the left-hand side, you can see, especially since 2024, we saw this massive demand overhang, right? Slash supply deficit, right? So institutional demand growth in terms of Bitcoin relative to the new supply was a multitude higher, right? And so I think that actually changed. If you looked at previous years, new supply issuance was usually higher, right, than institutional demand. And then you had this kind of iPhone moment, this kind of inflection point where this shifted, where this pivoted, right? And you saw this massive, pervasive demand overhang. Even in 2026, even in a bear market, right, institutional demand is still bigger than the new supply, right? And what's also very interesting on the right-hand side, for the first time in history, the change in institutional demand is higher than the on-chain capital invested for the very first time. So despite the fact that we saw on-chain capital outflows, right, institutions kept on buying. They were pretty consistent, right? That was also a first-timer. Yeah, elephant in the room. We're still in a bear market, right? Despite this, despite these tailwinds from the institutions. But even like the most recent decline in the price of Bitcoin can essentially be explained by a deceleration in institutional demand. If you look at the left-hand side, you can see net institutional demand, which is essentially the change in Bitcoin holdings of global Bitcoin ETPs, so US ETFs, European ETPs, and so on, and treasury companies, including MSCR, including Metaplanet, including Strive, right? So that is actually highly correlated with the performance of Bitcoin, right? And it first shot up at the beginning of 2026, but has since then decelerated again, right? And you can see most of this kind of buying is actually coming from treasury companies, not so much from ETPs this year. Yeah, treasury companies, they've done the heavy lifting, right? If you look at the left-hand side, that's the year-to-date change in Bitcoin holdings. Again, includes all kind of global treasury companies, MSCR and all others, right? So they bought 135,000 Bitcoins this year. New supply was 55, so they soaked up more than the new issuance of Bitcoin. While ETPs actually experienced net outflows, and that's where we saw most of the selling pressure coming from, right, from global Bitcoin ETPs. Another big consequence of this kind of institutionalization of Bitcoin is it has become a macro asset, right? It always used to be a macro asset, more or less, right, to a different degree. But as you can see, like the light blue line, the turquoise line, the bar, is actually the residual that you can't explain with macro, right? But even in a year like today, 2026, right, you can explain most of the variation, almost 80% of Bitcoin's variation with macro factors that also correlate with ETP flows, right? Giovanni would say it's probably related to the power law, but I think the variations, the cyclical variations around the power law, they can be very much explained by macro factors, right? So where are we in this kind of institutional adoption cycle, right? This is focusing on the US, right? Nowadays, your spot Bitcoin ETFs in the US, they account for $200 billion, right? Probably around 150 billion if you look at the very latest numbers. So $150 billion, while US ETF assets in total, including equities, including bonds, commodities, and so on, they're around 10.6 trillion, right? If you look at 401ks and other defined contribution plans, they're 12.2 trillion. It's massive. So the implied allocation from this, so if you compared these $150 billion in assets to these 10.6 trillion in ETF assets, it's around less than 2%, right? So institutional investors, they have a less than 2% allocation. We know from all kinds of optimizations that the optimal allocation to Bitcoin is even in a multi-asset portfolio, which is super diversified, right? It's probably closer to 5–6%, right? So they're even under-allocated still. Yeah, technology adoption follows an S-curve, right? Especially institutional adoption. So we're still early. That's the key takeaway. And if you consider the big picture, right? How is the supply actually distributed among the different entities, right? Individuals, ETPs, treasury companies, miners, Satoshi wallets, governments, exchanges, right? Then the vast majority is still controlled by individuals, right? Or those that we can't identify. But most of these coins are actually controlled by early adopters, right? Close to 50% of the supply. While funds and ETPs and treasury companies, they hold close to 15%, which is already a lot, right? But still, it's not the majority. If you look at other asset classes, it's upside down, right? 80% institutional holdings, 20% retail, right? If you look at equities, bonds, corporate bonds, like almost 90% institutional holdings, 10% retail. But how does this supply migrate from these individuals, retail, to the institutions? Of course, higher prices. Also lower prices, so some kind of volatility. But as we know from on-chain analyses, that especially long-term holders, they won't sell at lower prices. They're actually waiting for higher prices. So in order to incentivize this kind of migration to institutions, you'll need to have higher prices. And what we saw in 2026, I actually stole this chart from River. They're also doing a terrific job. But what you saw in 2026 is public treasury companies, they kept on accumulating Bitcoins, right, despite the bear market. While individuals, they supplied around 55,000 Bitcoins, right? It's probably a classical kind of story, probably a story as old as time, right? Retail selling into the bear market, institutions are scooping up the supply, and that's what we've seen so far, right? Funds and ETPs, they have distributed their coins as well. They've been net sellers. And new supply, of course, right? New supply is always exerting selling pressure on the market because most of the mine supply actually gets sold. Yeah, but where does this leave us? I think the key takeaway is that this kind of iPhone moment, 2024 moment, if you think back about 27, right, it was just the beginning of this kind of mainstream adoption of the mobile phone, right? It wasn't the end. And there's a nice quote by my colleague Teddy Fusaro, by Winston Churchill, that goes, this is not the end, right? This is not the end of the beginning, but it's probably not the end of the beginning either. Right? Yeah. Thank you for your attention. Thanks.